I'm joined by Morphic Asset Management's Co-Investment Officer, Chad Slater. Chad, thanks for joining us.
Thanks, Helen.
Now, how are you seeing the United States?
Yes, it's just a reminder for all your viewers, it's summer over there and markets over there are trading a little bit like summer. It seems like things have slowed down, and this is despite the fact they're actually in reporting season. It's all been a little bit droll, I must say. But everything's sort of going along, and banks kicked it off last week, and to be honest, they're a little bit on the weak side.
Yeah, so what did you make of them?
So our major banks haven't reported. We've got a short position in a company called Wells Fargo. I think Jack has talked about it on here before.
And of course, they've had a lot of problems, haven't they? But have they turned the corner?
Well,
or is that why you're shorting them?
Well, we don't think they've turned the corner. It's a bit of a cockroach theory that when something goes wrong inside a business, i.e. you find one cockroach, there tends to be other cockroaches in there. And we think Wells Fargo still, ultimately, the issues, to remind you viewers there, was that they were making up dodgy loans and cooking the books to a small degree, it says a lot about the culture of the firm. So they've got that to contend with, and our view is that these sort of things don't change overnight. So the result was a bit ho-hum. One thing that is coming out in the banks in general, and Wells Fargo in particular, is loan growth is slowing at the margin in the US. This is quite interesting because what it may suggest, and this is only very early, so this could play out arguably over the next year or so, is perhaps demand for credit isn't there like what it was. So maybe the Fed's hikes already starting to take some work. So I wouldn't say we've got a strong view on that yet, but it is quite interesting.
Yeah, so have you taken a view on the Fed hikes?
Yes, just on Fed hikes. The other thing that came out last week or so was Janet Yellen and her speech, which the market took to be dovish. In our opinion, she didn't actually say anything new. Yet the market took what it wanted out of it and basically has taken the probability of a hike in December down. It was running at about 60-odd% chance of hiking in December. They've cut that to 40-odd%. Look,
and is that your view?
Is our view. Look, it's probably a little bit on the low side. I'd say, given what she actually said and where they're seeing things, they should be closer to 60%. To remind you viewers, generally coming in, markets don't price in more than 70% this far out. Like, it's just too far to price much more than that. So it's a little bit on the low side, but not that much. But I think also,
isn't she watching, aren't they, as always, I guess, watching the data?
Yes, and the data that got their attention was the inflation data last week. That came in on the low side. It's quite remarkable. We're almost a decade into this expansion and they still can't get any inflation or wage growth there. So the market's essentially calling her bluff here, saying, we don't think if this data stays the way it is that you're going to raise rates by year end.
Yeah, no, quite extraordinary. All right, Chad Slater from Morphic Asset Management. We will leave it there. Thanks for joining us, Chad.
Cheers. Thanks, Helen.